USDA tightened the balance sheets for corn and soybeans in the June supply and demand report, but wheat stocks were slightly higher. The biggest drop came in new crop corn ending stocks at 1.58 billion bushels. That's down 105 million bushels from May, with production unchanged. The old crop carryout was also lowered by 60 million bushels. USDA left Argentina corn production unchanged, while Brazil's crop was lowered 2 million metric tons due to continued dryness. New crop soybean ending stocks were also lowered 30 million bushels from May, with old crop also down 25 million bushel. And with the drought in Argentina, USDA lowered soybean production another 2 million metric ton, but offset that with an equal increase in Brazil at a record 119 million metric tons. And the agency raised winter wheat production slightly, as well as new crop ending stocks to 946 million bushels. Old crop carryout was pegged at 1.08 billion bushels. Both were raised about 10 million bushel. Joining us this week with market analysis is Randy Martinson with Martinson Ag. And Randy, the markets have really been dominated by what I call the trifecta. Trade, fund liquidation, and the weather, especially on the grain side of things, obviously.
That's exactly right. I mean, the last couple of weeks, well, since the end of May, we've seen this market focus on trade concerns as well as weather. Weather has turned to be just about ideal across most of the growing regions, especially in the Corn Belt area and up here in the northern plains. We've gotten rain, we've gotten cooler temperatures, and it certainly has helped the crop, the planting get wrapped up and the crop advance.
We had a crop report out on Tuesday as well, and it was favorable for the corn market overall, with ending stocks lowered on both old and new crop. But the market has been pulled down here by soybeans and wheat and what's been going on there. But if you just look at the balance sheet, it looked good for corn.
Oh, it did. I mean, we saw a 75 million bushel increase in exports for the old crop, which we expected to see. We were at pace already. So seeing that increase, we needed to because of the lost business from Argentina. But also, when you look at the new crop numbers, they were very good as well. But the trade is looking at, because of good weather, the possibility of higher yields, and it's we're not seeing as good of a push as we should see from that numbers.
USDA used 174 bushel per acre yield average for this report. But with these favorable crop conditions, there's already talk about maybe 180, right? That would put that ending stock number much closer to 2.
Yeah, that's exactly right. And there is a lot of talk that they're going to be looking at 180. You know, we still have troubled areas, and that's the one thing the market is ignoring. Illinois is good. We're seeing Indiana in very good shape. They picked up some good rains. But, you know, we still have northern Iowa, southern Minnesota, eastern South Dakota. That's got trouble.
Soybeans also saw a reduction in both old and new crop ending stocks on a U.S. basis, and really a lot of that came from an increase in crush. And the idea here is that we're going to make up some of that because of Argentina and their problems?
That's exactly it. I mean, old crop crush was increased, new crop crush was increased. So the nice thing is it wasn't export. So the trade is, you know, when we saw those numbers come out, USDA is expecting that we will have some sort of a trade agreement and we'll continue to see exports go fairly well. But it was basically, you know, ethanol in corn and crush in soybeans that cut the stocks.
Here again, there's a fear that at the end of the month, we are going to maybe see an increase in acreage in both corn and soybeans. And if you see an increase in yield in both, what does that do to the balance sheets?
Oh, that makes it ugly. You know, you start looking at where you could take soybean ending stocks up to a record, back up to above a record, especially if we look at the increase in yield. They're talking 52, and the acre increase close to 1 million. Corn, same thing. We go back to the same ending stocks we had in 17, which means this market doesn't have to do much more.
So we had a friendly report for row crops. I wouldn't say it was as friendly for wheat. We saw a little bump in U.S. production and ending stocks, which was a little bit of a surprise considering what we've been trading for crop ratings, but we're starting to hear of some better yields.
We are. Eastern parts of Kansas, Oklahoma, seeing a little bit better yields come into play. I think abandonment will increase a little bit in the western regions, but overall, production's coming in okay. It's going to be a little less than last year, but it's still demand. Our dollar's still too high, and we're still not getting good exports.
And speaking of that dollar, it's going to continue to strengthen here because the Fed put another interest rate hike in effect, right? And more coming.
Exactly. And now we're looking at 2 more. So in September and December, we're likely going to see increases in the interest rate again. So yeah, the dollar will continue to be stronger.
We have about 20 seconds left. How do you schedule your marketing here with all of this in mind, all this volatility and uncertainty?
Right now, I'd tell guys, be patient, wait for some weather rally, which we should see something come into play in July. We'll make some catch-up sales, maybe put some puts in place.
Thanks so much, Randy Martinson with Martinson Ag, and you can hear our extended conversation at agweek.com.